Okay, exercise 215 is our first exercise where we need to do some T accounts. It tells us that we're going to need some T accounts for cash, and I always leave lots of room for that one. And that has an opening balance of $3,400. And then it tells us we need accounts receivable. So we need AR, accounts receivable, and that has an opening balance of $4,200. Notice they're debit balances for the assets. And then it tells us we need supplies, and that's supplies on hand, so that's also an asset. So we need to do that, and they tell us the beginning balance for supplies was $400. And then we have to do accounts payable. And the beginning balance in accounts payable is $3,500. And that's a credit balance. And then we have deferred revenue, which is also unearned revenue. They mean the same thing. So you'll see deferred or unearned, you'll see them used interchangeably. And in the deferred revenue account, which is a liability, $300 credit balance. And then we have two accounts with zero balances. We have the current period revenue account, which has a zero balance. And we have the current period advertising expense, which also has a zero balance. So that's where we're starting. Then they tell us to consider each of these transactions. So the first transaction, we have earned $8,400, and it's accounts receivable and revenue. So our accounts receivable is debit, $8,400, credit, our service revenue, $8,400. Then it tells us that we bought some supplies on account. So we debit our supplies for $2,300 and credit our accounts payable for $2,300. Next, it tells us we collected some cash from our accounts receivable, $10,200. So we credit accounts receivable, $10,200, debit cash, $10,200. Next, we have some advertising expense that we paid. So we have advertising expense debit, $1,000, and credit to cash of $1,000. Next, we have accounts payable. So we paid some of these bills, $3,700. So we debit accounts payable, credit cash, $3,700. And then the last thing we did is we got some cash and some deferred revenue, some unearned revenue. In other words, a deposit. Somebody paid us in advance for work that we will be doing. It's a liability. So it's $1,100 unearned revenue, deferred revenue, and $1,100 cash. Now we have to balance the T accounts. We have to add them up. You have to figure out what is the total, okay? So, the way to do this in my world, which is the lazy way to do it, the easiest way to do it, is add up both sides. I add up both sides, and that's 34, that's 13, 6, 14, 6, 14, 7. Add up both sides, and then subtract the smaller number from the larger number and write the answer under the larger number. That's the balance. And we'll go through and do that for all of these. Now for some of them it's pretty straightforward. Accounts receivable, we only have 2, and when we finish up it's 2,400. Again, adding up both sides, subtract the smaller number from the larger number, write the answer under the larger number. Okay. Accounts payable, we add up both sides, subtract the larger number, the smaller number from the larger number, and we end up with 2,100. Add expense, we only have the one entry. Deferred revenue, one entry. Revenue, and supplies. That's posting the T accounts and then balancing the T accounts. And to balance the T accounts, you add up both sides, subtract the smaller number from the larger number, write the answer under the larger number. Works every time.